S&P breaks out, hits a new high, only to pull back. We're going to dive right into this, talk about what's going on. We've got Netflix up about $40 at the time of recording this. We're going to get into that and what's going on. But the most important thing for us to do, I always find, is just to start at the beginning of the day and what was the news. And we had some retail sales that came out. Now, when that retail sales comes out, you're going to see this 830 level right here. What happens is they get that knee-jerk reaction, and you can literally set this level every single time. And all you're doing at that particular level is just marking off where the algorithms moved when that data hit. And it gives you a real clear indication of what you can expect off the open. Again, if you look right there is 933, you see that 930 bar tests that exact level. Can't hold, forms a bear, and then that was it. You have your little bear flag there, 3-bar pattern, breaks, can't stop there. See how it stopped exactly at that level? And there's more to this. So I want to just point this out because it happens all the time and people are baffled by this, but tries to get over that algorithm. Whoever bought there, guess what they're doing? They're trying to get out. Look at this later in the day, trying to get out. Later in the day, 2 o'clock, the sell-off, 2:30, dentist's favorite time of day. And then what happens? We sell off again. And that entire level that people are mystified, and that just seems to develop out of thin air, is all because of what happened at 8:30. So if you mark off these bars, it gives you a huge advantage. Watch this on the NASDAQ. You can see it right here, 8:30 once again, right when that retail sales number came over. That was actually really good. So you know when you sell down on really good news, and we had some really good news last night. We had some great news after hours that we're going to get. But see how this is going? See how this is acting right here? See how you're moving? Look at that 930 level. Oh, you crazy kids that love your zero-dated options. I mean, it doesn't get any easier than a 1-minute orb to the downside, breaking that with this being your stop. I mean, it's pretty much a layup trade and you're out of the day, boom, within 10 minutes and you're doing high fives with the bros, right? So when you see this kind of stuff, and if that's your kind of trading, just watch this bar. It's either going to work or it's not going to work, but you're going to know very, very quickly, because if you bounce off of there, you know to get out of the way. A lot of people don't even know to look at this. They don't think it's anything. I can tell you that if you watch what the futures market does at 8:30 on the data, you're going to see exactly where the big players are at, and it does give you an edge. It is not rocket science that you got right to the top of that area at 10 o'clock today. After this, forms that pendant, breaks back down, can't hold, and then all day, what another coincidence, at that 8:30 level, where did we stop one more time? At 12 o'clock. And then you just see pure bonk level all day until you got that sell down at 2:30, dentist's favorite time of day, and then establish that lower range, which is really not going anywhere. Now, zoom out of that on a 15-minute, you can start seeing some semblance of where that range may have come from, right? So if I just kind of come across from that range that's sitting right there, I'm sure you can see these levels as well, and the significance of these areas and how they were little battlegrounds before, right? And how resistance just flipped to support as everybody waits for what? The next great bear market. Meanwhile, support and resistance are flipping, right? So again, resistance levels that we once had are becoming what? Support. You want to take that into account, guys. That's what's going on. I see the lower highs as well, but we really had very little selling on the day. So if you go and take a look at this, clean all this off, and I get it, we're still not over key levels. Believe me, I'm fully aware that we're still at this level right here. And it's very important that we talk about that. That bar right there, and I know you guys are sick of hearing it, but you're going to hear it again. This is where you had your first month-over-month core inflation negative reading. And what that did was it scared everybody. And why we want to mark that off is because we always look at the market that way. We always look at the macro. We always want to see what they're doing. The macro leg, we want to look at the fundamental leg, and we want to look at the technical leg, right? That's our stool. And then we have our little stool top right there. And then that's how the world works to us. That's our trading world. Sometimes when we're leading at the bar, we lead on the macro, and then we kind of go from there. We lead on the back, we lead on the technicals. But no matter how we do it, we know one thing, that this always becomes what happened, who's affected by it, okay? And then when do we move? So they're the ways to look at it. What, who, when. So when you think about it, like you're going to have a macro event, we're going to get a new president one way or another. They're going to have different policies. That's what's going to happen. Then who's going to be affected by that? Well, if it's Trump, they're saying it's good for equities. If it's Kamala, they're saying it's good for bonds. Okay, who? Then you would look at the technical charts and they would tell you when. And then you just connect it all together, right? And then sometimes you're leaning one way more than another. Today, off the open, we can look at all the technicals we want. But at the end of the day, if we're going to clean this off right now, it doesn't matter. It matters, but it doesn't, is the best way to say it. Because at the end of the day, you have that 830 bar. So let's just say that retail sales were a disaster. You could be looking at this. So all my fancy levels don't mean anything if I go through them like a hot knife through butter, right? So it's really important to understand what is important and when it's important. And that stool helps us do that. If you look at retail sales, I want to say something. I read all of your comments and I really appreciate the comments on the go over more fundamentals. So we're going to start doing more fundamental analysis and you'll start seeing that being shown in these videos, especially during earnings so that you can see exactly what happened and then you can make your own decision on what you think of the data. But I'm going to start focusing more on the fundamental side because I think people are missing that. Now, retail sales posted solid gains. 0.4, we were looking for 0.3, and that's exactly what you want to see. Remember the graph where we keep talking about it, where we're always wanting to see, are we going into a recession or are we not? We're not going to look at it. I'll go again over it on Saturday just for a reminder, but we hit this sweet spot. Whenever you go through a rate cut, you're going two different ways. You go through a rate cut and you have that zero line of the rate cut. And then after that rate cut, two things can happen. The first thing is that you can go down because you're going to go into a recession. And then the second thing that can happen is that you're going to go up because you're not going to go into a recession. And during that first 2 months in here is when you start to figure it out. That's what we're going through right now. And that's why this data is affecting the market so much. So retail sales come out and it was solid. So we have a stronger economy than we think. And that means the dollar is going higher. Okay. So as the dollar goes higher, which is good for industrials and it's bad for the global software kind of companies. But why that's good for us, the industrials, and the euro is falling, Europe has their own issues. And you can see that dropped to an 11-week against the dollar. Last changed, hands down 108, down 0.3%. Single currency has declined 4 straight sessions, 2.8% against the dollar for the month of October. Largest monthly drop in 2023. What's really interesting about what's happening here from a macro perspective, again, is that we were all worried about us going into some kind of recession. Meanwhile, we're watching Japan, that's got their own issues, which we'll discuss. Japan's issues are that they may deal with inflation. But China is trying to stimulate their economy with something like their own, let's call it pandemic stimulus, because they never really did anything of consequence during the pandemic. They're trying to do their own stimulus. At the same time, Europe has massive issues. And so Europe's going to have to cut to stimulate. The dollar is going to go higher. And China, which is number 2 in GDP, has got issues. So we're starting to become the big deal. We're going to become the only game in town. That's what's starting to happen here. Now, this is on a macro scale, and we can talk more about this another time. But when you start to see these effects of what this data is doing to the market, you should really pay attention to it. Now, Netflix after hours absolutely crushed. And this is really important to get. You had a little bit of signals right into the close. I'll show you them. And you can read this through options sometimes, but it's also positioning. And I'll show you how I look at it. But let's dive into this a little bit and talk about what happened. The easy way to do this is just to look at this and go, you beat by 5%. And you beat by 50 basis points. But there's way more to this story. So I have no affiliation with these guys. I do think that they do an excellent job. So if you're ever interested in just grabbing quick fundamental research after earnings or something, and you're on Twitter, just get these guys, the transcript. They do a really good job. These are the facts. They don't tell you what the facts mean. They just tell you the facts. For example, someone would look at this on net additions, which we'll get into, and not think it's great. I have a different opinion of it. And I'll explain it in a moment. And I'll tell you why I think that the stock's going up. But to start with, this is really important. Revenue in third quarter grew 15%, 21% on foreign exchange neutral basis, 1% higher at the beginning of the first quarter. So I just want to go through this. If the foreign exchange rate on a neutral basis came across, okay, you're actually on 21%. So this is what happens when you have a strong dollar and other currencies are weaker. If they don't hedge the currency and then they convert the currency back to the dollar, you have a strong dollar and a weaker currency, you can get these currency exchanges. Remember how we just looked at the euro moving 3% in October? That's going to throw off everyone's comps. So when you note this stuff, you always want to think about that. Always want to think about that. In other words, what I mean is, if you're Microsoft and a lot of your business is global, and all of a sudden the revenues come out and the revenues are down, you've seen Microsoft do this after hours, especially on conference calls. You've watched it down 10 and then go up 10. Once you find out that foreign exchange rate, you're getting the true revenue growth. Nobody cares about the exchange they don't even hedge it anymore because they realize people don't care. They just want to know what it is. So it's really important that this is broken down like that, and that's why they break it down like that, just so you understand why people break out the percentage on foreign exchange rates, because it does matter on a neutral basis. 1% higher than the beginning of our quarter forecast. For Q4, we are forecasting 15% revenue growth or 17%. So they think the euro is going to continue to drop and the dollar is going to go higher. Now, I'm just going to say this to everybody. You all need a hobby because Netflix is healthy. Around 2 hours per day per paid membership on average. Who has 2 hours a day to watch Netflix? It was mind-boggling when I saw this. Every once in a while I'll watch something, but 2 hours a day, it was pretty impressive, people. But maybe a hobby. And what you're seeing here is that's actually an increase. That is kind of interesting, despite the impact of paid sharing. So here's the point that they're getting at with this statement. They got rid of the paid sharing, the riffraff, okay? And after they got rid of the riffraff, the new members that are signing up are staying on longer. So it didn't affect them at all. I think that's pretty important, but there's more. But wait, there's more. And understanding this comes from spending some time and actually understanding how to read one of these sheets. And there's a couple things here that are really important. But if you go and take a look at this line on operating, and you realize 6 months ago is when they started this ad revenue. And so you go back, okay, well, 6 months ago we started here, and this is where we had that decrease, and that's why net income was off, and we had a bad quarter, because we were making this turn. But you start looking at the net income turning. The important part that I think, and what I think you should really be paying attention to is, I think they're sandbagging this fourth quarter. And I'm probably not alone in thinking that. And we'll see that tomorrow. Why will we see that tomorrow? Because the investment banks are probably going to take their numbers up. And I'll show you what I mean by that. So fourth quarter, here's 29.6%. And yes, maybe they're going to spend more money. And maybe that's why they're saying it. Maybe they're going to increase their spending. But look at what they're saying the operating margins are going to be. So by saying this being the operating margin, and then looking at previous operating margins, right, for Q1, Q4 last year, and where you're at, even here, if you're saying, oh, well, it's a historical thing, and the end of the year is always more than that, it's still higher than this one. So no matter how you look at it, they're sandbagging this quarter based upon their gross margin, especially if you look at this in relation to this, meaning that third quarter in relation to this third quarter, this in relation to that. They're sandbagging the quarter, right? Just by looking at it from that perspective. So I think that's really very important. And then if you take this net income and you look at that net income from Q4 2023, it's almost double, right? So it's really, I really think that they are sandbagging the quarter here. Now, what else I really liked about this? The growth, you're back to double digits, which was nice. You're at this 5 million, which seems low, but there was more on this. If you look right here, total paid net membership addition, you look at the 5.1 level coming straight across. And I just want to show this because I do think it's interesting. Because if you look from this perspective, people are just going to say, oh, well, you kind of rallied up here, and you're going to say, yeah, you kind of see that. I mean, everyone kind of does. Oh, you're like, oh, we're lifting. That's way too that. There you go. Yay. Now, and then you start coming down. I get it. And then you have this is your net addition. Take 5.1 and draw lines. And then you start to realize, like, well, wait a minute. I understand you're coming back down, but you're telling me from the 19 and all this other everything after this, look at these levels and where you were and where you've come back to, right? So if you look at it from that standpoint, and then you realize that now they've got rid of the sharing. So these big moves in the sharing by getting rid of the riffraff, that spikes them up. And now you're implementing a different strategy. And that different strategy that you're implementing is increasing the people that bought it 2 hours a day to watching. All that's incremental revenue. And that's why the operating margins are going up. And that's why the operating margins are probably going to continue to go up. If you want me to start doing more fundamental research and start explaining this stuff in greater detail, I do look at this stuff. I act on it pretty fast when I see it after hours. Like tonight, we knew to get into this. I'll show you a couple ways that we knew. Or let me rephrase that. We thought that we might be onto something. So let me be clear here. No one ever knows what's going to happen, right? It's not that simple as looking at a chart. So let's rephrase that. What I want you to get is that you can do enough analysis if you know how to use options and really understand what is unusual data flow. The most people just look at sweeps and have no idea what they're truly looking at. There's a big difference in understanding what you should be looking for with sweeps and what you shouldn't. 90% of it's garbage and is just going to get in your way. This is something that I use. Netflix, they had this post data, and I can show this, but the other one that came out today probably can't show yet. But why I'm showing this is this shows Goldman, and this shows their prime brokerage desk. And what this is showing you is the position of hedge funds at their desk and which way they're betting on what names. So these were the big positions for the week that they were looking at: OMC, ASML, INFY, Taiwan Semi, Netflix. Tells you the day and their positioning score. So 3 is weak. No one has any faith. ASML was better than a coin toss, and 8.5 on 10. And Netflix at the end of today was almost pushing a 9, right? At the end of today. So what we saw here was Taiwan Semi was a 9, and you can see how that worked, right? So if you look at how they are positioning themselves, institutions that have what? That have research departments. We don't have research departments, right? I have people that I get research from, but I don't have a department that does exactly what I want them to do. And that's a very important distinction. You don't have access to what they have access to. So while they're playing the game of trying to convince everybody to sell the stock, okay, they're just getting in, right? And you can see that, by the way, that the calls weren't dropping in price, but nevertheless, we'll get into that. This is something that when we went live this afternoon, I'm like, okay, look, I'm going to play this. This is the positioning score. This is where they're at. The way they're leading on this, they're saying that it's going to be. And then once we saw the data, and once you learn this, and I do want to do a class on this, or I'll do a video for if there's enough on it, but you need to learn this because a lot of people will tell you, if I go on Twitter one more time and say, oh, I do the power earnings gap, I wait for the news to come out and then I buy. Okay, well, I'm going to be selling to you 40 points higher tomorrow. Thank you, right? Like you missed the move, man. What is that doing for you? I'm not saying not to do it. Right? Like if it's an international stack like Taiwan Semi, which we should talk about, I get it. I do. Not everybody wants to trade at 3 o'clock in the morning and get on there and figure out what Taiwan Semi's doing at night. I get this. But the person that made money was the person that did their work, knew this, okay, and stayed with the trade, and they made 20 points. The guy that bought the open and sold the close today made 3. Right? That's the difference between what I'm trying to explain. So somebody stayed in at 687 and it's 720. So somebody made 40 points and someone's going to tell you to buy a Powers earnings gap tomorrow. Okay. One of us made 40 points. Somebody else didn't. All right. And people will say, well, it doesn't matter. It does matter because that's the game. The game is to make the most amount of money possible. And you have to be looking for edge. Okay? Edge comes 3 different ways: macro, fundamental, and technical. It's not just technical, looking at a chart and saying, I'll play the gap. That's the easy part. The hard part is being able to get so nuanced that you can move faster than everybody else, right? You're fighting for inches. I can't stress that enough. If this is of interest, please let me know. I will start doing more fundamentals so that you guys can build frameworks around this stuff. I do think it's important for me to show timestamps instead of just saying I did this. But they'd call me out in the room in 2 seconds. But 403 bought Netflix, and then what I'm doing is I'm going through the data for them and just explaining it. And then as it's going up, I'm just pulling money out. I'd like to hold it, but you never know after hours. After hours is like, I was teasing them. I said it's like Thunderdome, if the kids know what Thunderdome is. And what you're doing here, right? People got thrown off by fourth quarter guidance. They didn't understand it. Excuse my typing because I'm trading at the same time. And then I'm just trimming it on the way out, but I'm just typing out what's going on. But they crushed. They absolutely crushed the quarter. And then all I'm doing is I'm marking off key levels. So what I'm doing here is just getting out continually up 20 trimmed, and I'm showing them where the levels are. You can see this little cutoff there, up 30 trimmed. I'm just pulling money out. And the reason I'm showing this, and I want to show you the timestamps on this too, okay, that was 10, 15 minutes worth of work. It took me 25 years to get there. Okay, you're not going to get this in 2 days, guys. Please understand that. It takes time. And hopefully you're not as slow as me and it won't take you 20. But then when I know that that's my level, and that's going to be a key level for it because that's where the majority of out of the money options are right here. And it also ties directly into this level if you look at it, and I'll drop that level down so that you can watch that level for tomorrow. But that's exactly where you got to. Once you understand that, you can do these trades. And I get the Powers earning gaps. I'm not telling you not to do them. I do them all the time. But do you want to own it at 680 and change and come in tomorrow with a 720 cushion? Or do you want to be buying at 720 cushion and selling to somebody like me, right? They're the questions you have to ask yourself, and only you can make those decisions. So I know I went off on a tangent there. I think it's a really important tangent. I think there's a really important lesson in there. I would really probably listen to that a couple times. Now I'm going to spend some time this weekend talking about this on the video again. You're going to go, he's going yammering about this again. But I think it's really important for people to get this. After Taiwan Semi today, price target raised at Bank of America Securities, generational opportunity. We reiterate our buy rating. We raise our estimates by 13 to 20%. Price target 190 from 165. Our top AI pick is NVIDIA. Our confidence in NVIDIA's competitive lead, 80 to 85% market share, and generational opportunity. 400 billion TAM, and boosted by recent industry events. Taiwan Semi, AMD, our meeting with AVGO. This is really important, again, to understand fundamental analysis. Okay, and why do you care about reading this? Just give me the headline, boomer. No, you got to read things. Here's why. When you go through this, Taiwan Semi, their results. Why did we do what we did? Well, here's the reasons. Number one, Taiwan Semi's telling us something. AMD's AI event was a dumpster fire. Okay, there's nothing there. They're nowhere near going to touch these guys. I know I'm going to get hate mail on it, whatever, but it's going to happen. So they've got no competition. AMD has no competition. Meetings with AVGO. Do you think their meetings with AVGO went well? Do you think AVGO might be a name that you want to look at if they're raising their estimates on the company based upon a meeting with AVGO? We were trying to figure out why Micron's going up. Maybe Micron's going up because of the meetings that people like Bank America are having with them and explaining how they fit in and what's going on with NVIDIA. I think when you start to dive into this stuff, even the unappreciated enterprise partnerships with who? Now, Oracle, etc., they're telling you where else to look if you read through this data. They're literally telling you the reasons why they're raising their target prices and the corporations that are going to benefit it and the ones that are not going to benefit, right? Devil's in the details, guys. Keep getting asked all the time, where do I think that NVIDIA is going? I just want to show you something. This is January 24, January 20. Just understand that here with NVIDIA, just January 24, this fiscal year so far, 1, 2, 3 years enveloped. 21, 22, and 23 are completely enveloped in 24. If I was to go back, I would have to go from 21 to 15 to get to where I am in 24. Okay. That's the kind of growth you're seeing in the video. Now, after hours, we're starting to see a lift. We have some things we have to talk about in regards to 14 days out before we have a new president one way or another. We're getting somebody. And we're watching this. We're trying to break out. Usually, you think you might go today. You don't. You have to watch this, but I would definitely still have this on my radar. Let's see how it goes when they get through all the OpEx tomorrow, and we'll go from there. Taiwan Semi was a blowout, guys. Just outright blowout. To me, does it hold? Does it not hold? I don't know. I don't have a clue. I'm sure you have a bunch of people that are selling their puts and buying more puts. So you're going to have a bunch of movement tomorrow on it. Again, there's your power earnings gap. So if you want to play it, all you do is just use the low of that bar. That's it.